Well, hey, Scott Melker.
Hey, how are you?
Doing pretty good. It's a busy day.
Yeah, I'm
So
sure.
I was just on the phone with our CTO, Russ Wilcox, and had everything on mute and came back in, and I was like, everything's very quiet. What's going on over here? So, would you like
Sorry.
to tell the audience a little bit about who you are and why we're like ridiculously excited for you to be on this trading panel?
I definitely can't speak to the latter, but I can tell you who I am. um, even the people in my house aren't that excited to see me on a regular basis. So, yeah, my name is Scott Melker. I was my longest career was not in trading. It was as a DJ and producer, which I did for about 20 years, but I always traded on the side, which is something I started as a kid. And when I retired from DJing, 2016, 2017, I decided to go full time trading. I had kids; it suited my lifestyle better. And then from there on, it's just sort of snowballed into, I guess, a Twitter presence and all those things that I never anticipated or planned. And I think at the end of the day, I'm just a guy who trades. And here we are.
Okay, all right. That's I'm gonna let you off easy on that one. So,
Thank
but
you. I'll take it.
only because I see Crypto Verb here in his epic beard.
I
So,
mean, I
Verb,
can't
you
beat
wanna?
that beer, but I feel like going mute.
Nice. Suburb. What's up, Scott? How are you guys doing?
What's up, Jeremy? How are you?
Doing well, doing well. Burb, I was just going through at WCC in Vegas, found a picture of you and I. That was the first time we met, and we were just about to down a piece of pizza at that poker tournament at Mike Tyson.
I remember that.
I was there too.
Yeah,
I
I
remember
didn't
that.
fare so well in that tournament, but hopefully next time.
Yeah.
Cool. Well, we can go ahead and get this underway. Excited to have you both. Obviously, you guys are both massive Twitter influencers around crypto trading specifically. You guys put out a tremendous amount of content. Burb, you always put out these crazy charts. I love keeping people educated. Thank you guys for everything that you've done there. The title of this panel is The Evolution of the Crypto Trader. And as crypto traders, maybe you can start by giving a little bit of an intro. I know, Scott, you did a little bit. But people would like to hear a little bit more about you, maybe how you got into crypto and where you kind of see the space going, and we'll take it from there.
Do you want Burb to go first or me? Sorry.
Scott, go ahead.
Yeah, I mean, I backed my way into it like most people, I think. I started because I was saw this mythical land of 100x like unicorn in a day trades. And I'd been trading for years. So I came in strictly to make dollars, wanted to trade, and it was a crazy time, end of 2016, early 2017, just very lucky timing. And, I think from there, as I said, I sort of backed my way into the actual use case and, the narrative and a true belief in the importance of Bitcoin as, hard money as an asset. And I think that if you're talking about the evolution of it, I mean, that was sort of an idea before, and I think we're seeing it come to fruition now. And I think that there's kind of a general awakening at the ridiculousness of, infinite money printing and QE and corporate socialism and all these things that are memes, but are actually really true. And I think that, this is the time, price aside, that we're really going to see a lot of interest in the space and a better shot at adoption.
Absolutely. What about you, Burb?
Well, the actual story, right? The actual story that it all started.
Yeah. How'd you get in?
Yeah. It was crazy day. It was a crazy day. I can remember, exactly this birthday because we were driving actually, with my dear friend Marcin Kacperczyk, or AKA Crypto Orangutan. He's also like the influencer on Twitter. And it was early 2017, that we actually just kind of like both got caught up, in trading actively the crypto, right? Because, well, see, I'm like for my background, right, being the chemical technology engineering, I was having like a very, I would say, specific type of group that I was part of, right, on the studies, and there were a lot of, information like IT specialists, right, and blockchain geeks and all that. And I can remember back in 2014, like Bitcoin being, on the lips of pretty much like everybody out there, right? Everybody was also, just watching, the empty gox just dropping like a heavy stone. for for the hack and all that, right? So it was definitely a hot topic back then. But well, I wasn't really interested in that back then, right? And that's the entire problem. And I was aware of Bitcoin, right? In 2014, I believe there might have been even earlier days that my grandfather used to hold these, right? He used to be a day trader. He was betting a lot, with the sports and all that. And Bitcoin back then, when it was so unpopular yet, it was used, for betting simply, right? Or for just getting some votes, whatever. And yeah, he actually just got rid of that because he came to a conclusion the other day that it's completely worthless. Just like I believe a majority of this Bitcoin holders back then, because they assumed it was worthless, right? And 2017 was the day that I actually just started diving in more and more actively to trade Bitcoin and all that crypto, right? So I kind of like chimed in the perfect timing for April and May pumps that were lasting back then on altcoins. That was like this massive first rally on altcoins that was happening, and I was very happy to initiate my trading active journey, to start getting discovering shitcoins. That's my story.
Nice. Well, just make an announcement. We've been joined by Maddy Greenspan. And Maddy, is it Maddy or Mati? I've heard both.
Mati.
Mati. Okay, great. Well, Maddy, why don't you give yourself a good introduction? I know you've done a lot in the space. I've been following you for a long time as well. I know you were over at eToro and now Quantum Economics. So why don't you give an intro and tell people what you've basically how you got into the space and why you're excited about trading.
Sure. So my name is Maddy Greenspan. I'm the founder of Quantum Economics, which is a firm for analysis, advisory, and money management. I've been trading pretty much my entire life. I started paper trading at the age of 13 and looking in my grandfather's Wall Street Journal, watching the price of gold and copper and stuff like that. I now have a trader's license, so basically a portfolio manager's license in the European Union. Building up the Quantum Economics firm. We have already 4 analysts on board, excellent VP. We're advising 2 of the most exciting startups in the space, Chili's and Lunar Crush, and now just looking to get into the money management side of the business. So lots to look forward to there as well. How I got into trading, I was working at eToro at the time, or how I got into crypto, right? I was working at eToro, and the CEO, Yoni Asya, sent out a blast email to everybody back in 2013. Hey, everybody got to check this out. It's internet money. My strength really as an analyst has always been to identify massive trends as they're occurring, so that people can get on board. And I immediately, after seeing what happened in 2008, the financial crisis and everything like that, I just went to Facebook, because we were all on Facebook back then, and it was like, hey, everybody, this is the money of the future. And the post got like 4 likes. I was a bit disappointed. Then when the bail-in happened in Cyprus, that was a big moment for Bitcoin. Bitcoin jumped like several good percentage points. I remember doing an analysis on it back then. And then I believe the Burb mentioned the Mt. Gox debacle, of course. And then early 2017, like January 2017, I did a video, guys, that said, hey, everybody, check it out. Bitcoin's moving. This is why. And that video pretty much went viral. And the rest is history.
Nice. I like it. So, obviously the panel is the evolution of the crypto trader. So all being crypto traders, you guys all got in at different times, but we've seen this evolution in terms of maybe, not only the trading mechanisms, right? You go from Mt. Gox and you evolve and you get the Coinbases, and there's easier on-ramps to be able to get in for the average person. But as far as like the actual, like the trader, somebody who's trading at a more sophisticated level, What was that journey like, right? Starting at the very beginning and getting into the space and then seeing more tools arrive, more adoption come into space, which then creates more liquidity. I mean, like, how did you guys navigate through those waters, right? Because it's constantly evolving every single day. There's a lot more cryptos that are coming online, obviously, as well. We're seeing a lot of movement. There's a lot that's correlated with, just the global economic engine, all the different things happening. So I don't know, just tell us how you guys have seen this evolve and how it's changed for you fundamentally as traders over time and where we're at. So I can pick on anybody, Skye, if you want to start it off.
Sure. Coming from legacy markets and having traded stocks at Forex and tried everything for all those years, it wasn't an evolution, it was a de-evolution coming into the crypto space. I mean, the tools, the exchanges, everything was a complete joke. I mean, you couldn't believe that people were actually, myself included, risking their real money on these like complete amateur platforms. We didn't have OCO orders, still don't on many exchanges. You had to choose between a stop profit or a stop loss or a take profit. So everybody's had the experience where they, set their stop loss when they went to bed because they didn't want to lose, saw price go up 300%, then come back and hit their stop loss while they were sleeping. Those kind of things. So I would say that crypto is still very much in its infancy, and that applies to a lot of the tools as well. I mean, you don't find an exchange or platform in crypto that can compete with the E-Trades and TD Ameritrades and Bloomberg terminals and all these things of the world. I think we are on our way up, but I would say that 2020 in crypto platforms still looks like 2012 in stock platforms did for me or earlier.
What about you, Burb? What was that like in terms of the evolution there?
Well, I'm going to start with the actual statement that it keeps evolving in a very, very aggressive and emerging manner, right? Every single day, and I completely agree with what you said. And the entire, I believe, situation with crypto, it evolves because of the restrictions that are, appearing or not, right? Or actually disappearing. And the actual evolution, defined, let's say, by how the market matures and how it evolves with regard to many let's say options and opportunities to trade, like derivatives, right? For example, it all comes with a time, and when the asset class is new, just like it is for Bitcoin and for crypto, it always takes time and years. Until it actually just grabs any serious, I would say, traction, any serious record globally, right? And then social media wise. And the entire, I believe, difference, between, let's say, regular traditional markets, legacy markets like stocks, let's say commodities, right? And crypto is, I believe, the market structure that stems from the average age of a trader, right? And there is no, I believe, shade of doubt that average age, let's say, of crypto trader is way lower, right, than for traditional markets, and this brings in the entire let's say volatility for the market, which should be obvious, right? Because people pretty much like less experiencing their lives because simply being younger. They, first of all, act very often less rationally, right? Because, first of all, they're not having enough experience to gauge any rationality, while the trading is about rationality alone, right? So while not really having, the actual background, the knowledge, the education needed to trade, they still are given chance to trade at times. And I cannot really count like how many times I've heard, in my life about traders like 13-year-old guys or 12-year-old guys that were trading crypto, right? And to what extent it's safe, it's that it should be available or not, that's another story. But to what extent the market is available and accessible to different groups of people, this is what drives the actual velocity of the evolution. And within crypto, it's just simply so extremely unorganized, such chaotic, process due to lack of the proper restrictions, pretty much, right? If you compare the restrictions for crypto, well, the way they used to be a couple of years back, or well, with traditional markets, well, again, not necessarily. There are always some exceptions, you know, like Robinhood, right, and all that, that they don't necessarily fulfill, or their, let's say, promised functions. It does directly impact, you know, how the market shapes. So I'd say, you know, whenever we talk about the market evolution, we must always coach based on the main factor, which is the restrictions, which is the legals. And as long as cryptocurrency, you know, market is not fully, let's say, regulated, and it always takes time to you know, to construct law basis for that, then I think it's going to be such, you know, unorganized and such volatile asset class, simply, right? Just when compared to the other markets. So this lack of regulations is what drives the evolution, and well, this brings the aggression. This brings the more, you know, intensify, let's say, emotions, like people, you know, committing suicides, as we've heard very sadly recently, and so on and so forth, right? So regulatory issues are the ones definitely for us to watch and to look forward into the future within these perspectives.
Maddy, your thoughts?
Yeah, I'm going to disagree with both Scott and Mr. Burb quite heavily. So what Scott mentioned, the difficulties in the beginning, for me, it was quite simple, actually. To be fair, I got my first one as a gift, so it was just a matter of setting up a wallet and you know, sending the person the address. They send me back a whole Bitcoin. It was a bit of a disappointment when it came back as 0.999999 because the fee had been taken out. I thought I was getting a whole one. But other than that, I mean, the process was quite smooth. eToro added Bitcoin into their multi-asset trading platform, I believe either late 2013 or 2014. So for me, it was just an issue of, you know, I could just right away integrate it into my portfolio along with the commodities and currencies and everything else. So, you know, as we've come along, actually, we've come a very long way. This morning, I posted a tweet. I actually was scrolling through my Instagram, which I almost never do. But in my stories, I actually saw a piece from Bloomberg, like an advertisement, sponsored ad about why you should trade crypto. And I was like, how far have we actually come until now that Bloomberg is, I'm still waiting for them to put the ticker on the bottom of the screen, right? With the BTC ticker and Ethereum, that will happen eventually. I keep talking to them about it. But you know, there's so many new tools now, and there's so many new on-ramps. I mean, we don't know if it's true or not, but there's rumors that PayPal is about to get involved. I mean, that's huge. But institutional on-ramps are already here. Fidelity and Backed. CME Group is still paper trading, but it's still there. I mean, people can diversify with Bitcoin into their portfolio. Basically, any hedge fund manager in the world can already trade it. We saw last month Microsoft Excel and Google Spreadsheets are now adding plugins where people can track their crypto portfolios across different exchanges. I mean, it may have come in gradually, but I would say for a young market, an asset class that's only 10 years old, I mean, we're there. We're already there.
Yeah. Sorry, I agree with all of that, actually. And I was speaking specifically to the tech and the tools initially when I came in versus what I was seeing before. But I agree 100% with everything you just said as far as the path to adoption. And, you know, I agree that institutional money is here. I agree with everything you just said, basically, so just to clarify.
Cool.
So as far as traders, right, we're all looking at different things. We're all looking at different signals. Obviously, you know, the point of Coin Genius is to bring all that together. And there's a lot of cool companies doing that in the space, right? You know, one of the things for us is to share with the audience as well. I mean, you guys are the pros. You guys have felt the pain. You guys have made bad bets, good bets. Let's talk about some lessons learned before we get into some of the tools and some recommendations you guys might have. But what are biggest lessons learned? What are the mistakes that everybody makes getting into that you could bestow on somebody else to maybe give them the opportunity to, you know, just step over that mistake and, you know, potentially save a lot of money?
Don't touch leverage. There's no need for it in this market. Crypto
Yeah.
is volatile enough. You have brokers and exchanges that are offering 50, 100 times leverage. Those are scams. You're going to get wrecked. Like, honestly, if you want to try it out with a few sats, go for it. But I promise you're going to get licked. Just how it works. If you want to trade crypto, like, there's no need for leverage. I mean, you can go, 2 times or maybe 5 times if you want to be extreme, but anything more than that is just dangerous.
Yeah, I would absolutely agree with that. Yeah, Bird, what do you think?
Well, I completely agree with that, to be fair as well. And I think the entire problem about, the trading with leverage and then, well, consistent losing money stems from living the stereotype. And whenever I talk, to the traders, right, when they come over to, to boost some investments and so on, it's always kind of like a very similar, how to call that, very similar like a scenario, right? So first you kind of like, get some money. There is like this lucky strike, right, that gets you like a couple of good wins at the very beginning, having no damn idea, for how it works, but still somehow you manage to make it work. Then you get so, self-complacent, right? You get self-complacent. You're thinking like, damn, I'm so good at that, right? There's no way I can keep, like, I can lose money on that, right? And the second that you're starting to see that is actually, well, the turning point. It's like the pivot, right? And then comes the very first loss. And when the first loss comes, then you're like, damn, I'm not going to sell at the loss. I'm just going to wait, until it recovers, and then I'm going to escape at the next top, right? And well, the thing is that you are trying to escape at the very same level, right? And the thing is that, when it actually just trend reverses, and it more often than not happens like that when you have no idea what you're doing, and all the media are shouting all the places, just the way it was in 2017, about Bitcoin and all, then you are actually just entering the very final stage of the market cycle. I mean, not necessarily the market cycle, but the peak of the market cycle. And there comes the self-complacency, right, as I said, and you just kind of like begin your losing strike. And then you try to build it up with leverage because, well, you don't have a lot of capital on your hands, but you still, you might have heard somebody just saying, there is such a magical, like a miraculous way to make money, and it's so damn easy to do this, right? And you put on the leverage. But you don't really know that it, also leverages all your losses. So you end up losing even more, right? And so on and so forth. And you try to escape every next high, but your emotions tell you to kind of like escape higher than than the price actually reaches. And that's the reason why 90% of people very often trying to day trade with having no strategy in place whatsoever, they end up losing like between 80 to 90% of their capital, so their equities. And that's how it works. This is the trading is a zero-sum game, and that's how it works. It's a battle of who's smarter.
Yeah, I mean, that's a known psychological phenomenon in trading called random reinforcement that you just described, which basically, for some reason, like you said, everyone wins at the beginning. But the true meaning of random reinforcement is that the market punishes good behavior and rewards bad behavior, and it always happens. So trade without a plan, you go up, you go up, you go up. Now you think you're a genius, right? Everyone's a genius in a bull market. You never trade with a plan. You make money for a while.
Scott, should we all be pulling tickers out of a Scrabble bag now?
Yeah, exactly. That works though. And on the flip side, you trade with a plan. You stop out 5-6 times in a row, right? And you're like, my plan sucks. And then you start doing the opposite again and trading with no plan, and the market rewards you because you get lucky, and it's an endless cycle. So I agree with that definitely. And I think that speaks to, I mean, if we're talking about lessons learned, I mean, I've gone broke so many times I would care not to count. And it was always because I traded without a plan or didn't have a proper risk management strategy. I was, went in too heavy, didn't understand position sizing, all those things. It was a long time ago, but those lessons don't leave your mind. So I would say definitely that, you could talk about all the indicators and the price action and your entries and exits till you're blue in the face. And I don't care, man. You can raise baby unicorns to tell you how to get your entries. You can throw darts, or you can it really makes no difference if your risk management strategy is bad, and to what Mati said about leverage is a absolutely huge point. I think that people come into this market and they see leverage as a way to compound the size of their position, and they don't realize that the purpose of derivatives and leverage options, all these things, is it's a risk management tool for hedging. It's not something that you do with your entire portfolio to make money. It's, most people who are professionally using options, derivatives, those things, they make the market more efficient. It's a way, if you have a huge holdings in one direction, that you can hedge the other way using the leverage without the counterparty risk of putting a ton of money into it and things like that. So it just doesn't even serve its intended purpose in crypto for most people. And I think that's why it just destroys them.
Yeah, no, I totally agree. So what you're saying then is all these kids that are trading Hertz on Robinhood without a plan, it's probably not going to end well.
It's the best example that there's ever been.
Right?
For sure, not going to get, and yield farming, the new one.
Right. Well, I mean, the thing about
that's an accident
right?
waiting to happen.
So, yeah, that's not going to go well for anyone who jumps on late.
So let me ask you fundamentally, and this is kind of a silly question, but at the same time, the people that got into Bitcoin early, were they really smart or just really lucky? Right? Because that is probably one of the best investment opportunities, obviously, that's ever been, right? The returns exceed that of any other investment in history in terms of you getting in Bitcoin in 2010, 2011, in terms of the returns you've generated to now. Nothing else compares, right? So,
I think that's true. I don't see why you have to pick one. I think it's both, and that the third one you're missing, that's actually the most important, is they have balls of steel. To hold through that volatility for that long and to maintain your conviction. People love to say that they got lucky, and yes, of course, investing in something for $1 that goes to $20,000 involves a lot of luck. But most people I know who were in crypto in 2010, 2011, and Bitcoin sold at $1,000. Yeah. Right. I know very few people who rode the wave all the way to the top. So that takes insane conviction and just the strongest hands I've ever seen.
Or they lost their keys. I'm just kidding.
Helpful if you find them.
I can't access
Found them later. Boating accident.
We lost our car keys today.
Yeah. Well, we have a few questions. I kind of want to weave them in here. So one of them is, does the panel believe that all crypto exchanges should be regulated? It's a big one.
I'm gonna have a tough time answering that one. I have a license, so I'm gonna pass.
Okay. We live in a new digital world, right? There's privacy issues. I just had a piece published on Cointelegraph just talking about fundamental shifts, and obviously we're shifting away from centralized governing bodies. There's just a lack of inherent trust, whether it's governments or large corporations. There's censorship happening, right? So there's a need and a want for people to have some sort of anonymity and have these decentralized exchanges. I think it can make a heck of a lot of sense. But then obviously you run into that problem with regulation, right? The regulators do not like that. So that's a tough one. It's a conundrum for the space, but is it needed is the real question to protect people. So you don't have people like the 20-year-olds taking their lives because they got completely wrecked.
But they're doing that on regulated exchanges.
Mm-hmm. It is a bit of a paradox, isn't it? Bitcoin was created to bring freedom and to have a form of or an asset or money that is outside of the scope of governments and banks and regulation. And this is in general what we're going through is because most regulation actually starts out very local and then expands into a global, into a global form, right? So the New York Stock Exchange was first regulated locally, and then everybody kind of, it started expanding, and now everybody can trade on it with regulation. For the first time in history, we have an asset class which is starting out global in nature, right? And now the regulators, who are all locally based, they're scrambling and trying to figure out what to do with it. And eventually, each different region and each different market is going to figure out a way to deal with it, right? Whether it's, completely ban it or completely embrace it, or 1,000 different ways in between. So it is quite a paradox, and it's quite interesting watching it play out. But I don't think that there's a clear answer of should it be regulated or should it not be regulated. It's both.
I'd like to add something there, and thank you guys first of all for having me. I appreciate it. Maddy, I'm kind of in almost the same position you are. I'm licensed, but I'm sick and tired of having to explain to a chief compliance officer what a token is and what it does. So, I think what we are seeing certainly on the international stage is a number of self-regulatory agencies that are starting to evolve on an industry level, that is establishing standards that could, be held up to, a Howey test against the SEC. And I think this is kind of where things are moving right now. Over the course of the next 2 to 3 years, everybody is, claiming they have the best compliance in the world, right? And everybody is doing everything that they have to adhere to compliance. And 98% of it's total bullshit, okay? Because it still sits behind, I would say the porous nature of kind of the way transactions are done across both exchange environments that have some sort of regulation and then complete DEXs. So there is definitely a need for standardization and normalization to adhere to a global standard. The pundits are, talking about new world orders and, single currencies and so forth like that. So
Brian, I'm sorry to interrupt you. Brian, this just so everybody knows who's speaking. We can't see you, Brian, if you want to share your screen, but this is Brian Feinberg of Plato Technologies.
I'm having a bad hair day, but it's okay.
Okay.
Me too, yeah.
Mine's cut at home.
Nice.
Yours looks good, man.
Actually, I'll
shave the sides and let the top grow.
I'll do a shameless plug for myself then. How about that? Okay.
There you go. Cool. So guys, a few other things before we get into the next part of the panel, right? Which is just some of these questions, which is, I think a lot of people are interested, obviously, and I'm not going to go down the road of saying like, what are your BTC price predictions? Like we all know it's anywhere between 1 and 1 million, right? That's where it's going to land. And none of us know exactly where
1,010,000.
Land, right? Okay. There you go.
And
there's a lot of other projects out there. We heard on the first panel talking about Bitcoin. Some people feel that there's only one crypto that needs to exist, and a lot of people are like, no, there's a lot of other good use cases in Ethereum in the top 10. Like that's a good diversified portfolio approach. What are you guys interested in? What are you guys looking at? What do you guys have as far as your portfolio, if you don't mind sharing? Like what's a good allocation, and why should people care about the other, 3,000, 5,000 plus cryptos that exist today?
I'm going to just jump in, and I'm not really a trader, but I like my vantage point sometimes from the sidelines and being able to look at the data and let the data kind of tell the story, right? As opposed to me trying to interpret how to get a higher alpha into a portfolio. But what really is interesting to me right now is that as the market goes through its next evolution, right? And I still believe from both the macro and the micro perspective, we have a lot of ways to grow here in the next couple of years that will start to, again, take other asset classes and put them in our rearview mirror in terms of overall performance. I can't talk about beta, I can't talk about volatility, right? I can't even talk about the price of Bitcoin because frankly, to tell you the truth, I have no idea which way it's going, okay? But there are assets out there that are helping kind of drive this economy right now that I think are going to have substantial, benefits to institutional investors that are taking that into consideration and making, bets on, on the future growth of, these assets that we still can't really fully understand how the valuation is calculated, right? There is no valuation metric. We live completely. The stuff that we're doing with you guys, Jeremy, is all, kind of all about demystifying the analytics side of kind of what this data means at the end of the day and how people can use it to kind of benefit discovery. Because we're all in that same position right now. We want to put best of class innovation on the front lines, but we also want companies that are not going to crash and burn because of you know, malicious bot activity and inside market maker front running.
And Brian, we're gonna pivot just to make sure
Okay.
everybody has a chance to talk here.
I'm going to turn my video off. I want to spare you guys, but anyway, it was really nice joining you, and I'll see you later today. Okay.
All right.
Thanks a lot, Brian.
So Burb,
So
Scott, Maddy, I mean, what are you guys looking at? Like, what's exciting to the market as traders?
So I think you referenced the Bitcoin supremacists in your question, and I've actually been blocked by most of them just for trying to keep an open mind. And I wrote about it, a whole thing in my. I got my rage out a little bit yesterday in my newsletter that I'm writing. Basically, Nassim Taleb attacked Giacomo Zucco, and I couldn't even see what Giacomo said because he'd already blocked me. He said almost all. He said Bitcoin is a good idea, but almost all Bitcoiners are idiots. And I'm sorry, but I had to agree with him, just based on that vocal minority who's trying to say that, you know, what Satoshi Nakamoto had in mind when he created Bitcoin. No, it means that all government is bad. That's not what Satoshi said. And, you know, anybody who's using Bitcoin as a flag for that is just perverting something that's beautiful. Digital assets and the blockchain are basically the next step in the evolution of financial assets. In my view, within the next 10 years, all assets will be natively digital. Nobody keeps stock certificates in a safe anymore. They're all held by the broker. But there is a desire, and there is a slight supremacy to have assets that are built natively digital and that people can personally customize, custody, and that there's fractionalization and all of those type of benefits. They're not huge, whopping benefits. The moment, you know, the incumbents obviously have an interest to keep things the way they are. But eventually that's, you know, the evolution is going to win out. And I think that you can see that just based on the people that I'm associated with, you know, as an advisor to Chili's, who's, in my view, nothing short of one of the most exciting projects in the crypto space right now, simply because of the target market that they're going after, which is sports fans. And they have FC Barcelona with, you know, 62 million followers tweeting about tokens. Right. This is like we're entering an entirely new world over here. And if you want to say that, you know, that's only limited to Bitcoin, I think that's very small-minded.
Scott, what are your thoughts? What are you looking at? What's exciting to you outside of Bitcoin? And we obviously know Bitcoin's exciting itself, but.
Yeah, I mean, there's a lot of projects that are exciting, but that doesn't mean that the coins excite me. Okay. I think that we still exist in a world where, you know, Bitcoin sneezes and everything is one huge correlated basket of death. And to me, that's not an investment, you know. I trade, you know, I'm one of those dudes. I trade altcoins to make more Bitcoin. And then, you know, I keep a little, and from those profits, I generally keep a small position in those altcoins in case it is the one. But I'm not sitting around waiting for one of those to emerge. I really believe, you know, that, I mean, you can see it happens all the time. I mean, it's Markowitz portfolio theory, right? I mean, when the market dumps, everything goes to a one, everything's correlated, it all dumps, and then they find their breath again a day later. It's the same with Bitcoin, but it's every day, right? So Bitcoin makes a big move unless it's in that perfect altcoin trading environment and all alts get hurt, you know, disproportionately, regardless of how good the team is or how active they are on GitHub. None of that matters. So that's not an insult. Actually, I think it's the best part about trading this market is that it really is like a technical trader's wet dream, because I don't have to worry about checking on the earnings and I don't have to understand the P&L of an altcoins company. Just look at a chart and decide if it's going to get me more Bitcoin and go on from there. And so there's a lot of projects I think will change the world, but that doesn't mean that as a trader, I'm going to invest in their coin, you know.
I think that's a really good point. That's something that the Coin Genius team says over and over again. Just because you hold a coin does not mean you own access or have a piece of equity.
It's not stock.
In company. This is
it's not stock.
No, but it's more than that. I mean, some of the projects are exciting, but the token economics they don't constitute price increase. So, I mean, it's beautiful what you said.
Yeah, thank you. Awesome. So, real quick, Burb, final thought for you. We have about 2 minutes left, and then I'll kind of make a closing statement.
Yeah. Yeah, I think there are a lot of good points already mentioned from Scott and Matty, and well, to me, I'm a big fan of top of diversification and considering crypto itself as a very highly risky asset class, right? So I'm not going to hold all my like entire equity within bit crypto itself. I diversify into real estate. I diversify within traditional markets. I diversify within crypto and cash. Well, to just keep just as Scott said, on a similar basis that adds the leverage in a way to the entire portfolio to boost the profitability, and that's all, right? Whoever invests entire equity and sells houses, to invest, and then in crypto in some shit coins that 2 years later are dead. Well, I don't think that's one responsible. I don't think that's needed. I don't think that's rational, right? So I can, knowing that and considering crypto itself as an extremely risky asset class, I touch only the major ones most often, and add, just within my crypto, let's say equity, I add only additional, let's say, risk boost from the gems, so-called gems, right? So the projects that are fundamentally extremely interesting and promising, but not necessarily, just flying, just over the radar, right? Over the radar of well, publicity. And that's my final thoughts. And I definitely suggest, don't invest everything in crypto, diversify, and have always some cash.
I think that's really great. Scott Melker, Wolf of All Streets on Twitter, Crypto Burb, Maddy Greenspan. Thank you guys so much for joining us. I think we're seeing this evolution of a crypto trader. I'm evolving every day as a trader myself. I think fundamentally we are changing the face of what the average trader is in traditional capital markets, because crypto is a hell of a lot more exciting, and we're seeing that translate to capital markets. And there's a lot more volatility that I could argue than ever in history because of that, because people crave that 24/7 market that crypto is. It kind of creates that sort of gamification that allows people to have the release of serotonin in their brain. So you see these companies that are going bankrupt like the Hertz, and they're just mooning overnight in the Tesla stock. It's making for a really exciting market. And to your point, if you diversify effectively and mitigate and hedge some of your risk, then I think there's a lot of opportunities here in the market. So thank you guys again. Really, really appreciate it. Follow everybody on Twitter, please, everybody. These are some of the top traders in the space, and they provide a lot of really great content. So please follow them. And thanks again, guys.
Thank you. Do this at a bar in Vegas next time, guys.
Absolutely. 2021.
Maybe next time.